Picture this. The world's financial markets are in chaos. News anchors are breathlessly reporting historic losses. Headlines scream about trillions of dollars vanishing overnight. And everywhere you look, there's panic. Most people see disaster. But somewhere, in a quiet office or a private study, a billionaire is calmly watching the same headlines and quietly getting richer. How? It all comes down to a single, powerful rule that almost nobody talks about, but which has helped the world's wealthiest not just survive market crashes, but thrive during them. When markets crash, the average investor freezes. Fear takes over. People rush to sell, desperate to avoid further losses. The mood on trading floors is frantic. You can almost feel the anxiety in the air. But billionaires? They see something different. They're not asking, how much will I lose? Instead, they're asking, is this a clearance sale? To them, a market crash isn't just a crisis. It's an opportunity, a rare moment when the world's best companies are suddenly available at a discount. Take 2008, for example. The global financial crisis sent shockwaves through every market. Retail investors were dumping stocks in a panic, convinced the world was ending. But Warren Buffett? He was quietly buying up shares of Goldman Sachs, making a deal that would later earn him billions. In India, Richest was loading up on Titan, a company most people were too scared to touch. These weren't reckless bets. They were calculated moves, based on a deep understanding of value and a willingness to act when everyone else was paralyzed by fear. So what's the secret? What's the rule that sets these billionaires apart from the crowd? It's surprisingly simple, but incredibly powerful. The rule is this: never buy what's popular. Buy what's valuable, especially when it's hated. When everyone else is running for the exits, the world's best investors are quietly walking in, looking for bargains that others are too scared to touch. This rule isn't about chasing trends or following the crowd. It's about doing the hard work, researching companies, understanding their true worth, and having the courage to buy when everyone else is selling. Billionaires know that the best deals are rarely found in the spotlight. They're hidden in the shadows among the stocks and assets that most people have given up on. The world's wealthiest investors wait patiently for great companies to go on sale. They don't panic when prices fall, they get excited. They know that every crash, every downturn, is a chance to buy quality at a discount. And when the time is right, they don't just dip a toe in. They buy big, taking advantage of the fear that keeps others on the sidelines. Of course, this isn't easy. Emotion, fear, and the constant noise from the media make it incredibly tough to go against the crowd. Every instinct tells you to run, to protect what you have. The headlines are terrifying, and the pressure to follow the herd is overwhelming. But that's exactly why so few people do it, and why those who do can build extraordinary wealth. Here's the good news. You don't need billions to use this rule. Even small, steady investments during market dips can build real wealth over time. The key is consistency and courage. By investing when others are fearful and focusing on value rather than popularity, you can take advantage of the same opportunities that billionaires do. It's not about timing the market perfectly. It's about having the discipline to keep investing, even when it feels uncomfortable. So the next time the market panics and the headlines are filled with doom and gloom, ask yourself, can you stay calm when others are afraid? Can you see opportunity where others see only risk? The real question isn't can you, it's will you. Because in the end, fortune doesn't just favor the brave. It rewards those who are willing to act when everyone else is frozen by fear. The secret rule of billionaires is simple, but it takes courage to follow. Will you be ready when the next crash comes?